Welcome to our quick review of events which have been occurring on investment markets during the final quarter of 2018. It's safe to say that the last quarter was nothing but a shocker. Investment markets experienced a great deal of volatility, particularly towards the end of the financial year, and this was for a number of reasons, not least of which were fears of trade wars being initiated by Donald Trump in the US between himself and China, and there was also some socio-political activity happening in Europe, which also had downward pressure. So in the Australian market, the market had peaked at around about 6,400 in September or so, but by the end of December or so, it was at about 5,400. It's good to see that the market has recovered somewhat, and as I'm recording this on the 14th of January in 2019, the Australian market has recovered to 5,800, so it's starting to move upwards again, and that's really good to see. In terms of US markets, there was also similar downward pressure on valuations. They had peaked at nearly 27,000 in September and had fallen as far as 23,000 before recovering at around about 24,000 as we're speaking right now. So this has been a turbulent time on markets. The overall performance of most of the asset classes over the 2008 calendar year has been negative. Australian and global stocks have fallen by around about 7 to 10%, and this has meant that our clients' portfolios have also experienced downward movements in their valuations. It's important to note that you really need to stay the course. We're in this for the long haul, and any adjustments like these ones are not things that we've seen before. They're just things that happen in investment markets from time to time. And markets no doubt will recover over time, and if we stay the course, we'll be able to take advantage of those. In fact, now, while valuations are low, it would be an appropriate time to be investing if you had surplus funds available. One of the other things that has been of concern in terms of investments for our clients has been the downward pressure on residential real estate prices in Australia. And we've seen some downturns in the order of 10 to 15%, particularly in the capital cities of Sydney and Melbourne. This has also had a negative impact on clients' overall financial positions, and also has placed some pressure if they're particularly heavily geared in terms of their borrowing to buy residential property. So there it is. There's my summary of investment markets for the last little while. As I mentioned, it's important to stay the course, and no doubt markets will return to some stability and upward movement as time goes by. The timing of that, of course, we can never be sure, but we will hope to see a better improved performance in 2019 and beyond.